There is a monster hiding in the global economy. It is not a conspiracy theory. It is not the Illuminati. And it is not illegal. It is a machine that controls nearly half of all the financial assets on planet Earth. That's roughly $239 trillion. For context, that is more money than the GDP of every country in the world combined twice. We call this machine the shadow banking system. And if you have a pension, a 401k, or a high-yield savings app on your phone, you are already feeding it. The terrifying part isn't that this system exists. The terrifying part is that, unlike a normal bank, which has safety brakes and emergency exits installed by the government, the shadow system has almost none. It is operating entirely on faith. And right now, the math suggests that faith is running out. To understand how we built a financial doomsday device, we first have to look at something boring: a regular bank. For the last 100 years, the deal has been simple. You give a bank your money. They keep a little bit in the vault, and they lend the rest out to your neighbor to buy a house. If everyone panics and tries to withdraw their money at the same time, the bank collapses. We saw this in the 1930s. It was ugly. So the government made a rule. If you want to be a bank, you have to follow strict laws. You have to keep a certain amount of cash on hand. And if you fail, the government insures the deposits so grandma doesn't lose her life savings. Safety. Boring. Predictable safety. But Wall Street hates safety. Safety is expensive. Safety means lower profits. So, starting in the 1980s and accelerating wildly in the 2000s, Wall Street asked a very profitable question. How can we act like a bank without actually being a bank? If you aren't technically a bank, you don't have to hold expensive cash reserves. You don't have to pay for insurance. You can take massive risks with zero supervision. Enter the shadows. Today, a shadow bank is simply any company that lends money or moves cash but doesn't take normal deposits. It's the hedge fund buying up single-family homes. It's the private equity firm lending billions to struggling tech startups. It's the money market fund where you park your cash for slightly better interest. On the surface, this looks efficient. It looks like innovation. But here is where the mechanism gets dangerous. In the normal banking world, money is created by the central bank. We trust the dollar because the government backs it. In the shadow world, money is created through collateral. Here is how it works. Imagine I am a shadow bank. I have a $1 million government bond. I can go to another shadow bank and say, "Lend me cash, and I'll let you hold this bond as security." They give me the cash. Now they are holding the bond. But then that second bank turns around and says, "I need some cash too." So they take my bond, the one they don't even own, and pledge it to a third bank to get a loan. This is called rehypothecation. It's a fancy word for a magic trick. That single $1 million bond is now acting as collateral for 2, 3, maybe 4 different loans at the same time. The system creates a daisy chain of debt where everyone owes everyone, and they are all using the same few assets to prove they are good for it. It works beautifully when prices are going up. Everyone feels rich. Credit is flowing. The global economy runs smooth as silk. But what happens when the price of the collateral drops? Let's say that bond loses 5% of its value. Suddenly, Bank 3 calls Bank 2 and says, "Your collateral isn't worth enough. Pay me back now." Bank 2 panics. They call me. "Pay me back now." But I don't have the cash. I spent it. In a normal banking system, the Federal Reserve would step in and say, "Okay, everyone calm down. Here is some liquidity." In the shadow system, there is no Federal Reserve. There is no hotline. When the panic starts, the doors just lock. This isn't theoretical. We saw a preview of this in March 2020. When the pandemic hit, the stock market crashed, yes. But something much scarier happened in the plumbing of the financial system. The shadow banks panicked. They all tried to sell their collateral at the exact same second to get cash. But because everyone was selling, there were no buyers. The market for U.S. Treasuries, the safest asset in the world, stopped working. It froze. The entire global economy was hours away from a total seizure. Your credit card would have stopped working. ATMs would have gone dark. The only reason it didn't crash is because the Federal Reserve broke its own rules and printed trillions of dollars to bail out the shadow banks. They saved the world, but they taught the shadow system a terrible lesson. Take as much risk as you want. If you win, you keep the profits. If you lose, the taxpayer will save you. Since 2020, the shadow system hasn't gotten smaller. It has grown. And now it has found a new playground: private credit. Since regular banks are under pressure, shadow banks are now the ones lending money to businesses. If If you walk into a major bank for a business loan, they might say no. So you go to a private credit fund. They say yes, but at a much higher interest rate. These loans are not traded on a stock exchange. They aren't audited by the public. Nobody really knows what they are worth. It is a black box containing $1.5 trillion of debt. The narrative you will hear on the news is that this makes the economy stronger. They call it diversification. They say that by spreading the risk out to thousands of investment funds rather than a few big banks, the system is safer. There is a quiet irony in that. We are told the system is safer because the risk is hidden. But when you hide risk, you don't eliminate it. You just make it harder to see the avalanche coming. The reality is that we have moved the risk from the balance sheets of big banks to the pension funds of firefighters, teachers, and office workers. When a shadow bank fails, there is no FDIC sticker on the door. You don't get a check from the government. You just get a letter saying your assets are illiquid. That is the polite finance word for gone. We are currently living through the greatest monetary experiment in history. We have allowed the banking system to be replaced by a complex web of algorithms and bets that no single regulator fully understands. The shadow banks have made credit cheaper and faster. They have greased the wheels of the global economy, but they have built a car that can go 200 miles an hour but has no brakes. So the question isn't really if the shadow banking system will break again. The math says it has to. The question you need to ask yourself is simple. When the music stops and the collateral disappears and the doors lock, do you know where your money actually is?